Jokes apart, let's talk about specialty chemicals and the agrochemical space. Nuvama says domestic demand environment is favorable for agrochem and intermediate manufacturers. Demand revival is led by firm crop prices along with government rural push. They also add freight costs, and the Red Sea crisis may put pressure on near-term margins. To discuss this and more, we have Rohan Gupta, Director at Nuvama Institutional Equities, joining us now. Rohan, good afternoon. Thank you so much for joining us. I wanted to understand what has exactly happened to excite this space so much, because managements have been commenting that this recovery will come by in the second half of FY25. Is there any incremental trigger? Do you think the recovery has come in faster than expected and that's why some of these stocks are buzzing?
Yes, hi, good afternoon, and thanks for having me on your channel. So yes, I mean, first of all, what is changing in the sector is basically the outlook, because we are now coming more closer to the recovery. I don't think that there has been a significant change in the commentaries of the management, and even as an analyst, we have been expecting that there will be sequential recovery, which should be in place already. And Q4 results have been broadly in line with the analyst estimates. I think that the Q1, Q2 also will mark a sequential growth, adjusting for the high base in Q4. So apart from that, I think that the sequential growth is already in place. Most of the agrochemical companies, the global environment is likely to improve in the second half. But yes, the things and visibility is now only just getting better. That's what I think the stocks are pricing. That is number one. Second, in agrochemicals, especially in domestic agrochemicals, intermediate manufacturer, I believe, are likely to benefit in a near term, because there is a vessel availability crisis in China. The freight rates have gone up almost 4x to 5x. That is definitely going to help some of the domestic agrochemicals intermediate manufacturers. That is a short-term idea, probably over next 3 months to 6 months. I think that these are the players probably which are rightly placed to benefit from this scenario.
Rohan, just to step back a little bit, could you give us a sense, or could you give us a breakup as to how is the Indian domestic market playing out, and how is it that exports are placed? So far the worry was that the inventory was still quite high as far as export markets were concerned. So are you now seeing a certain amount of recovery over there as well?
So as far as domestic agrochemicals markets is concerned, that the view was already positive, because initial estimates of IMD and other forecast agencies forecast was favorable for the good monsoon this year. So far now that is holding on, and that we are expecting even with the supported by the government rural push, domestic formulation companies are likely to do well. That's where we remain positive on the companies like maybe Dhanuka, Insecticide India. These are the players who are likely to do well in the domestic agrochemicals. As far as the exports markets are concerned, I think that especially companies focusing on agrochemicals for the exports market, they will see a recovery more importantly in second half. However, as I mentioned, there's sequential recovery in place. I mean, the numbers will be on every quarter should get better, but large part of the growth should be coming in the second half. Companies which are not primarily dependent on agrochemicals for their exports, companies like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, these are the players who are not completely dependent on agrochemicals. In my view, they should be continuously growing on every quarter, even from the Q1 itself. And that's where we are more positive on the names like Gujarat Fluoro, Aarti Industries, Galaxy Surfactants, which are primarily focusing on FMCG or consumption-led business model.
Got it. So when you talk about consumption-led business model and some of the stocks which could cater to that, the recovery that we are seeing, is it demand-led, or there's some pricing recovery as well that we are seeing? And if there is pricing recovery, so what happens to commodity chemical names, say Tata Chemicals, because they have been under pressure as well?
So what we have been maintaining, that prices for most of the either commodities or specialty chemicals have bottomed out in month of August, September, and since then they have been stabilized. There was a concern that once China, after the New Year come up, in month of maybe March, April, the prices may again go down. So far now, it has not happened. So prices are still holding on, and on the contrary, in some of the chemical prices, there is a uptick of maybe 5% to 10%. So the bigger worry was that after September, October, People were expecting that once China come back after the New Year opening in month of March, like how they did last year, they dumped the commodities, they dumped the prices. So far now, that has not happened, and I think that is a good news for the sector. We have been maintaining that there is no further room for any price cut emerging from China, and that prices are still holding on. Now, the recovery which we are talking about, it will be all across. First of all, global inventories level are drying down, number one. Second, we are also seeing that re-inventorization has also started happening up to in some pockets, and a little bit of the price increases. So the recovery is not only driven by any one thing; it's across the drivers of the growth which are going to play out.
Okay, thank you so much, Rohan. We have a lot more questions, but today we are running out of time. With that, let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side.